2-3 years after COVID, we saw a huge uprise in the market, and markets did extremely well. So I think the talent pool is tremendous. And I think from a political perspective, from a policy perspective, we have done a lot. We have introduced the PLI scheme 2 years back during COVID. That there is a global bipolar world which we are living in. There's US on one side, China on the other side. They don't see eye to eye. There's geopolitical tension. Russia is another one. Strong market move changed everything. All the 3-5 year return became a double-digit return. And the entire takeaway from this session is that please manage yourself. Meditation is a great tool.
Namaste viewers. Today we have Mr. Pankaj Tibrewal from Kotak Mutual Fund. He is one of the largest fund managers who is managing more than 41,000 crores of assets across 4 schemes. They are Kotak Small Cap Fund, about 9,200 crores, Kotak Emerging Equity, one of the biggest mid-cap funds, around 26,000 crores, Kotak Equity Hybrid, 3,500 crores approximately, and Kotak Business Cycle Fund, the latest entrant to his portfolio, which is 2,200 plus crores. So all put together, all the 4 schemes put together, he is managing around 41,000 crores. And all of these funds, now Kotak Emerging is a mid-cap fund, Kotak Small Cap, as the name suggests, it is a small cap fund. All these funds have done extremely well, and he has a lot of conviction in this area, in the equity fund area and small cap, mid-cap area. He has a lot of conviction. Not only conviction, he has proven it true for the past several years. Investors in those funds have been rewarded very well. He is a graduate in commerce from Xavier's College, Kolkata, and he has done his master's in finance from Manchester University. He has been associated with the mutual fund industry since 2003. Earlier to Kotak, he was with Principal Mutual Fund. Now that has been merged with Sundaram Mutual Fund. And from in Kotak, he is there from January 2010. So for the last 13-14 years, he is with Kotak Mutual Fund. And congratulations, Pankaj. Welcome.
Thank you, Mr. Chuklingam. Thank you. Thanks
for accepting our invitation to share your knowledge with our subscribers. First, I know you as a person of small and mid-cap funds. So are you a small and mid-cap specialist?
Rather than categorizing myself in a bracket called mid and small cap, what I would like to say that I am probably a stock picker, and probably through the medium of our funds want to uplift the financial status of many individuals around the country. And if we can do that successfully over 3, 5, 10-year period, I think that would give the maximum satisfaction to us as a fund house and to me as an individual. And that is the way I look myself. Rather than only looking at mid and small, I think it's something, if we can make people richer, is something what attracts me a lot.
Good. Yeah. No, that is a great thing to hear. I mean, rather than looking at numbers or, as a specialist in particular area, you have now a larger goal in front of you for uplifting the population of India or the investors of India. When you give better returns, automatically, they can utilize for many purposes. That's I agree with you. The same thing when Mr. Nilesh Shah was in our office, he shared the same view. Rather than looking at how much return we have given, how much how many investors, etc. Now ourselves we are benchmarking how many investors we have served, how much upliftment we have done the Indian society. So this is a larger goal. Now the fund houses are evolving a one step higher.
Absolutely.
Yeah, that's good to hear that. How do you look at the markets in the current scenario? And kind of in the past 6 months or 1 year, there is not major returns. Of course, point-to-point returns will be good, but generally there is after post-COVID uprise. Now there is a calmness in the market. Here and there, it's roaming around. How do you see this positioning of the market now?
So, Mr. Choklema, I think for the first 2-3 years after COVID, we saw a huge uprise in the market, and markets did extremely well. Somehow the markets peaked at around September, October 2021. And since then, it's May 2023, about almost 1 year, 9-10 months, which has gone by, where markets have given almost zero returns. And I think it's a welcome thing, because after a very strong up move, generally markets should consolidate. Otherwise, it would create excesses in the market, and the accidents would be far deeper and painful. And I think I welcome this kind of a consolidation which has happened into the market, which probably is taking out the excesses and the froth which was created. And it's always good, because people who want quick money probably are the ones who suffer in this kind of environment. And I think our senses over the next 3 to 6 months, it will be a brilliant opportunity to start increasing your equity allocation through the STP mode. Generally, when you see no returns, people kind of fatigue out. People say equities is not a good game. It's not great. FD you look at, FD is giving you 7-8% return. Why to go into equities? Because last 1.5 years has not been good. But every time, you think about like this, and over a 3-5 year period, you see that equities is an asset class which creates wealth. So I think it's an asset class which tests the patience of investors. And I believe that next 3 to 6 months, almost you will complete 2 years of markets with zero returns. And my sense is India is in a very, very strong wicket. For all the viewers, let me take you through some of our thought process on the country. And I think probably the next 5, 7, 10 years will be one of the golden periods India has ever seen. And that's not because it's just happening out of fluke or out of my national passion. The changes which have happened on the ground are something which will help us deliver strong growth across the world. So I don't know how many of the viewers are aware, but over the next 5-7 years, India will contribute 20 to 25% to the incremental GDP world growth. And most of the other economies, including China, is slowing down. Interest rates have gone up, which is slowing down the demand. And in China, for 30 years, they grew at about 5 to 8%. I think there's a growth reset happening in China, and the new growth rate range will be 3 to 5%. Europe has its own challenges on demographics, energy cost, and so on and so forth. US is also slowing down because of a sharp increase in interest rates and other problems. So I think over the next few years, I think even if we deliver between 5 to 6% growth, India will contribute a significant portion of the global GDP growth. And look at the changes which have happened over the last few years. I think one of the biggest change COVID has brought in and realization to the world that they were overly dependent on China for every small thing, whether it be Europe, whether it be US. And with the geopolitical tensions going around in the world between US and China, you are seeing that globally, every company, large company, wants to shift a part of their supply chain out of China. And India is a classic case where if anybody wants to have a manufacturing base, no better place than us, because we have the huge talent. Apart from China, tell me which country produces 1 million engineers every year? Which country has thousands and thousands and lakhs of computer engineers every year? Doctors every year. So I think the talent pool is tremendous. And I think from a political perspective, from a policy perspective, we have done a lot. We have introduced the PLI scheme 3 years back during COVID. And what PLI is, production linked incentive scheme. If you set up a factory and produce, you will get that 2, 3, 4% benefit, which Indian corporates normally used to lack versus the Chinese competition. And companies after are coming and setting up operations in India. Mr. Choklingam, I think it will be worthwhile. Let me give you a few examples. And those examples probably will help your viewers understand from the Indian standpoint of view. So, few years back, electronics,
Want to share? You can go ahead and share some presentation.
I'll share it a little later.
Okay.
A few years back, electronics used to be a very important portion of import from our perspective. So it used to be crude, coal, gold, and electronics had become the third or the fourth largest import item. And it was a point of worry. And after government introducing the PLI, we have seen that all the three manufacturers of Apple, Foxconn, Wistron, Pidgeotron, all have come. A large number of other manufacturing are setting up operations or giving it outsourced to the companies who have won the PLI license in India. And I think the entire ecosystem is developing around the phone side. We saw that Apple for the first time exported 5 billion worth of iPhones. Who would have imagined 3-4 years back that Apple would export out of India? And that number of export from an overall phone perspective, including Apple and other manufacturers, you may call me an optimist, but I think in next 4-5 years, we have the potential of exporting about 50 to 70 billion dollars worth of phones, and India can become a great manufacturing hub. Look at what is happening on the air conditioning side. Generally, as a country, we consume about 90 lakhs to a crore ACs. A few years back, most of the ACs, 80% of them, were imported out of China. Either the indoor unit, outdoor unit, compressor, and anything. Government came out with a custom duty and import duty, and they have barred it. And now what is happening is a game changer. On the ground, there are 2 or 3 compressor large factories coming up. The indoor unit is starting to get manufactured here. Outdoor unit is starting to get manufactured here. And in my view, over the next 3 years, 80% of the air conditioning will be manufactured in the country with a very high value addition. So a lot of changes on the supply chain across the board is happening. Many European companies are shutting down their inefficient plants in Europe and moving the part of their production units on the, whether it be bearings, whether it be many other industrial commodities to the Indian arm. And I think this is something which is a mega trend in making. And I believe that over the last decade or so, India was not doing so well on manufacturing. We were a services-driven economy. We saw what happened in IT. We saw what we can do in pharma, being a pharmacy to the world. Now we will show to the entire world what we can do in manufacturing. Chemicals is another piece. We were only 1.5% market share, Mr. Choklingam, few years back. And now we are 3.5-4% market share. And last 5 years, you saw how chemical stocks did well whenever there was a tailwind in the sector. Similarly, let me give you another example. There is a place in Gujarat called Morbi. It's the second largest cluster of tiles in the world now, with 550 to 600 manufacturers and small manufacturers. There's no large company out there. Few years back, we used to do 4,000 crore worth of export to the entire world from Morbi. This year, my sense is we finished March 2023. We may have done about 17,000 crore worth of export just based out of Morbi. And mind you, there's no large company out there. They are small entrepreneurs. And if you place the 4 tiles and the tagline of Morbi is cheaper than China, better than Italy. So you produce at a less cost than China and the quality is better than Italy. That's their tagline. And I can tell you, if you place the 4 tiles together, Italy, Spain, Morbi and China, you can't make out which is one. And India is the cheapest and the quality is also good. So I'm saying there are ground level changes which are happening, which makes me believe that over the next decade or so, we will see significant amount of upsurge in manufacturing. And this sector could be $1 trillion+ sector, which is currently about $440 billion kind of a overall thing. Another sector which is showing very good promise is defense. We have already seen how government is focused on defense and the import substitution part. My sense is that it's not only government of India, Right now, defense is the hottest sector in the world. Every country in the world is now looking to increase their defense expenditure as a percentage of GDP, which they have not done for many, many years. And Russia earlier used to be the major supplier. Now Russia has seen sanctions by the most of the countries in Europe or US, right? And a lot of those countries are looking to Indian manufacturers, both the government and the private units. Can you supply us the products? And I think this sector probably over the next 5-10 years will throw up huge promise the way we kind of look at the country. And a couple of slides I would like to show to your viewers so that they understand that what we are talking about.
This is what my exact next question you started covering the next 10 years, because last time when we met, in Chennai, at that point of time, you were gung ho about Indian economy and the next
Yes.
decadal effect in India,
Yes.
from tiles to defense to air conditioning to all those industries coming up. And I 100% agree with you. We 60-70% of our export was from services sector, and now it's the manufacturing is inching up.
This is what our growth in per capita GDP was from 1960 to 2021. This is past, right? That we grew at 1% CAGR from a GDP growth per capita compared to Japan, which grew at 18%, Korea, which grew at 17, and we just was one. And peers outperformed India by a huge margin. Now look and fast forward India now. This is the real data, and this is since 2008-9 when the global financial crisis had struck. Look at this number. This is the total debt of every country. India is the only country where you see this number, which has deleveraged itself since the start of 2008. All other countries, whether it be China, France, Japan, all have kept on loading debt to their government federal balance sheets and kept on, supporting growth through debt. But that's not a sustainable model we have seen in the past across many companies and countries. And the way India has come out of global financial crisis and even COVID is now getting noticed by the rest of the world. And look at the way, the household debt, corporate debt, government debt, all together combined, we are lower than what we were since 2008. And nobody will tell you this. This is what India is doing well despite shocks. When the crude had last time hit $100 in 2008, our economy was 1/3 of what Brazil and Russia combined were. Again, in 2022, we saw oil hitting $100 when the war started. And we are now 100% of what Russia and Brazil together now. So the way we have grown ourselves from the dependency on oil perspective, and just to give you some data points, we are at about 900 per watt consumption, per capita consumption of electricity. In the next few years, this number will go to 1450, 1500 kilowatt hours per person in the next coming 7-8 years. And 75% of that incremental supply is supposed to come from renewable sources, whether it be hydrogen, whether it be solar, whether it be wind, and so many other things. So our sense is that over the next decade or so, India's dependency on oil will also start coming down, which is today a problem. The moment oil starts moving, going to 100, 90, 110, we all get worried because the current account deficit starts to widen and there's a pressure on currency. I think slowly and gradually we will de-risk ourselves from the fluctuation of oil, because the incremental energy which will come to us will no longer be from oil-based, will be more on the renewable-based side. This is the progress which I think a lot of people don't know. In 2014, our economic size, and we were 10th largest in the world. Now we are 5th largest in the world. We have surpassed 5 more countries over the last 8 years in terms of overall size in the economy. And we are very close to the 4th largest as well. Probably in a year or two, we will move there. Our share in global GDP was 2.5%. As I speak, it's 3.5%. And don't forget what I mentioned in the start, that incremental basis, we will be 20 to 25% of the global GDP growth. So this is the stock at 3.5%, but incremental market share will be more than 20% in terms of growth. Our share in trade services was 2%, it's 2.2. Our share in global FDI, look at the way, and FDI money is something which is more stickier in nature. FI can come and go out anytime they want. But once you put up a plant on the ground, you can't just dismantle the plant and take it away. And this is what the number speaks about. In 2014, our share in the global FDI flows was just 2%. And as we speak in last year, 2022, it moved to about 7%. Our auto production, we are now the third largest auto manufacturer in the world. We are the second largest steel manufacturer in the world. And the mobile phone, which I was talking about, we used to be nowhere in the top 10. And in just 8 years, we are number second now in terms of the second largest mobile manufacturer in the world now. And look at this part. Our India's weight in the BRICS, which is Brazil, Russia, India, China, and South Africa was 14%. It's moved to 30% now. And our India's weight in emerging market, which used to be 7%, is now about 14 to 15%. So I'm just saying that a lot has changed at the ground level, which gives me a lot of hope and confidence that if you try to time it, if you try to look out for 1 year, 1.5 years, probably you will miss the mega trend in making. And I think, these are the changes which are at, I'm just giving you the factual numbers. I will leave to you and your viewers to decide at the ground level, are they seeing the changes or not? And another thing, Mr. Chokulingam, is that, sorry.
On the top, number of unicorns.
Look at number of unicorns. I mean, we have all seen that, right? That story has played out so well globally. People have recognized Indian unicorns as well. And these are changes which have happened in 7-8 years. Think about, fast forward yourself to 2030, 32. And on the hindsight, it will look like it was such a easy decision to make. And we probably didn't do that action. So I think, think about broadly what are the things happening. And there is a fact that there is a global bipolar world which we are living in. There's US on one side, China on the other side. They don't see eye to eye. There's geopolitical tension. Russia is another one. And in that, India has behaved so maturely and with a neutral stance. And a lot of companies economically are looking upon India and FI investors also. We interact with so many FI investors. They are saying that China is a short-term trade. India is a long-term trade. And I think that people over the next couple of years will be surprised with the kind of flows we can get into the country. So I think there's a lot of changes. And also don't forget that the biggest change which I am seeing is the IT stack which India has created. Think about it. In any part of the world you go, even in US, you go to Europe, you go to any place, within seconds, you can use the UPI and transfer the entire transaction, your money. You have the Google Pay, you have the Paytm. That payment transaction system is nowhere available in any part of the world in such a large democratic country. And this is making sure that the money access, the credit access can reach to the smallest of the talukas and the villages, which was never the case. And the easy availability of credit will means growth for a lot of people. If I would have said pre-COVID that India will see such COVID, world will see such COVID, but don't worry, friends, we will develop our own vaccination. And it's just based on one Aadhaar and one mobile connection. The entire country will be vaccinated within 6 months. You would have laughed on me. And the fact of the matter is we have just all gone through that space where in just a span of 6 to 9 months, entire 140 crore population was vaccinated based on Aadhaar and mobile. And the moment syringe went into our skin, the certificate was there on the mobile phone. Yeah. And my friends in US still carry the physical certificate. This kind of a IT stack which India has created will make sure that the policies and the other implementation which used to have a lot of leakages, which used to, take a long time to execute, can happen within few days, weeks, or months now. And this is a leapfrog jump which India is seeing, in my view. And if you can, think about visually, slowly and gradually, I think the informal economy or the cash economy will slowly come down, and cash economy will lose its relevance. Everything is now linked to your Aadhaar, PAN card, everything, right? And this will make sure, and there's a habit change inside people. People, if you see your maids, your domestic help, your iron wala, your sweet shop, your restaurant, everybody says that you just give me a GPay, no? Why don't you transfer it through a GPay and stuff like that? Now think about a sweet shop. He never used to report income tax in a proper manner because he used to get a lot of cash collection. Now, if the customer is habitual of paying through a digital mode, 40-50% of his transactions are through digital mode, he can't escape the tax route anymore. He has to file taxes. So slowly and gradually, the personal income tax and the corporate tax, which is surprising us, and even the GST, is because of all the IT link which we have done over a period of time. And I think this will make sure that our growth over a period of time is more structural in nature rather than cyclical in nature, that for 1 year, 2 year we have and the rest we kind of ignore it. So I think these are some of the on-ground changes. And I say to people that 100 crore bank account, 100 crore Aadhaar, and 100 crore mobile connection is the deadliest cocktail India can ever get. And if we can utilize that properly, I think we can, give a push to our growth in the country very significantly.
Good, good. I mean, it is a wonderful, probably next 10 years or 15 or 20 years. The story
We can't hear you. We can't hear you.
Yeah. So there is a great thing. Generally, it's glad to understand, probably when look at the numbers, as you said, GST last month, if I'm right, in April, it was like 1,80,000 crores, 75-80,000 crores. I mean, no one imagined that, it would have doubled within a span of 5-6 years.
Absolutely. Absolutely.
These are all, very positive triggers. And now coming back to your, funds that you manage, one of the largest funds in mid-cap, Kotak Emerging Equity and Kotak Small Cap. So how these funds are positioned and how they will be, going forward, what investors can look for.
So quickly, first, let me tell you about the philosophy of what do we look into when, we kind of pick into stocks. And just for your viewers' sake, what is a mid-cap? Now, SEBI has defined mid-caps very uniformly across every fund. So the first top 100 companies of India in terms of market capitalization are defined as large cap stocks. From 101 to 250th companies are defined as mid-cap stocks. And anything below 250th ranking in terms of market cap falls into the small cap bucket. So this is the standard definition of mid and small caps. The second factual thing which your viewers should be aware of, that mid and small caps looks very nice in the term. They are multi-baggers, but they are multi-wealth destroyers also, if not invested properly. And the mortality rate in mid and small caps tends to be very, very high. And that's why, always remember the Warren Buffett's rule. Rule number 1, never lose money. Rule number 2, never forget the rule number 1. So in mid and small caps especially, just let me give you data. Only 9% of mid caps over the last 20 years have been able to transform from mid to large. And only 5% of small caps have been able to transform from small cap to large cap. So the mortality rate is so high. So you need to be extremely careful on how you are investing and identifying the companies. And the first criteria and the filter we use is management. I think we have time and again seen that management filter is the most important filter. If you get a lousy promoter management team, even good the business can be, they will destroy the value out of business by doing wrong stuff. And if the management is very good, sincere, honest, integrity-wise very high, even a mediocre kind of a business can turn into a gold mine. So assessment of managements are very, very important. We do it through various art and science. We have a network of chartered accountants all over the country. We try to understand, and first call goes to that chartered accountant of a local place who is more resourceful to tell us about the promoter and his background, how he behaves, how he lives his personal lifestyle. Because we believe that the lifestyle of a promoter and company are not too separated in India as of now. So if you can know that part, you can know how that intention of the promoter and management team is. Also, we try and do our own survey of speaking to employees, ex-employees, suppliers, creditors, all kinds of people to understand the ethos and culture of the firm and the promoter's integrity of the firm. And that's the first filter which it has to pass through. And we are bringing some art and science to it so that we don't go wrong on our management selection. The second part is the opportunity in the business. Is it a small fish in a large pond, or it's a large fish in a small pond? If it's a small fish in a large pond, that means the opportunity to grow through market share gains, new product development could be huge for that company. And we can see a long runway for growth for that company. The third thing we kind of look into is that everybody focuses on profit and loss account, the earnings growth. We say earnings is important, but what is more important is the cash flow in the bank which is hitting you. And we always follow this mantra that top line is vanity, bottom line is sanity, but cash in bank is reality. That if you keep on doing a business for only top line growth with no profit conversion, your business is sure to die. And accounting profits also don't make much sense unless the accounting profits convert into cash flow into your bank account. That's why top line is vanity, bottom line is sanity, but cash in bank is a reality. And by doing this again and again, you will focus on balance sheet and cash flows more than the profit and loss account. And the fourth important part is the valuation and the price you pay to own that thing. Everything is good at a price. Even it may be the best company in the world, but if you buy at a wrong price, if you pay for a silver, a gold, or a platinum price, you probably will suffer along with it. So you have to pay the right price, right valuation, and make sure that you are not overpaying for a company and a stock. And if you keep doing this, repeated philosophy, which I just explained time and again, it looks simple. Sounds easy, but it's not the best, it's not the easiest part. One can repeat it again and again. And last but not the least, Mr. Choklingam, this is more qualitative, that you can do all what you want about financial management, valuation, but if you don't have control on your own temperament, I think you can never be a great investor. And I think time and again, we have seen that you will see periods of greed and fear in the market. How you behave during those periods is something within your control. What is Fed going to do? Whether China is going to attack Taiwan? What is the other central bankers doing? What will RBI do? Are things which are beyond your control. What is in your control? If you can do that time and again and have a view of equanimity and always enjoy what you are doing, I think success will come to you. And that's the important part in stock picking, which nobody will talk about, but it's very, very important. And avoid big risk, avoid big mistakes. Investing is all about making less and less mistakes. And over a period of time, you will realize that when you make less mistakes by having a lot of filters, over a period, the compounding impact automatically starts to work out. So the mantra is that don't make very big mistakes, don't take very big risk, just measure it across. And once you have identified a good company, be very lazy. Don't try and be a trader. Be very lazy with your investments. And all these things will work to your advantage in terms of, and that's what I have been doing in the last 13 years.
Exactly. That was coming to the point, in your portfolios, the turnover ratio, I have seen it, the churning is very, very less.
Very less. So the churning will only work to the broker's advantage, not to the investor's advantage. Always do proper research. We will also go wrong. But our sense is that there is a, gorilla to King Kong strategy. By all these filters, try and select 50, 60 gorillas in your portfolio. which at time of investing, you also don't know which one will become a King Kong. But finally, if they keep on doing the right things, some of those gorillas will become King Kong and become 50x or 100x for you. But honestly speaking, while investing, I will not know at that time. I can only see my filters. I can only see that these are the right things. These are the right companies. They are the right guys who are doing it. And over a period of time, if they can generate return on capital, which is higher than the cost of equity sustainably, I think they will create wealth over a period of time. So this is the way I have always managed the fund portfolios and made sure that compounding automatically works.
So I completely agree with you. Generally, when we talk to retail investors, they want to have a number, how much they can get, potential expected returns, And they say if someone invests in small and mid cap, either through SIP or through bulk mode, of course, nothing is guaranteed, market risk is there, everything, people understand it. But what is we say, like for example, large cap, we say you may expect 10 to 12% per year over the next 10 years. That's just a SIP. So along those lines, how much one can expect in investing in mid or small cap funds in the next 10 years?
So let me give you, another way of explaining it. If you are bullish on India, if you believe that whatever I have told you has some truth and merit, you can't ignore this space, which is mid and small cap, beyond the top 100 companies. Because a lot of the new industries which are coming up, for example, I talk about infrastructure, defense, manufacturing, chemicals, recreation, so many other industries. When the per capita GDP keeps on improving, these are the companies which lie in the mid and small cap space. They are not in the top 100 companies. They will become at some point of time, but today they are small and beautiful. And I think if you can catch them early, if you can catch them right, I think you will get, rewarded very significantly. So I think first you have to believe in that thought that is this the time where India will demonstrate its power? And if yes, then you can't ignore this space. And this space has huge alpha opportunities. So people talk about active managers, fund managers not being able to beat Nifty. They are not able to generate alpha. But if you look at the mid and small cap space, most of the funds over a 3, 5, 10-year period have been able to demonstrate a very significant alpha generation versus the index. And my sense is, looking into the past, future nobody knows, that on an average 3 to 5% has been the outperformance over a longer periods of time of this category versus the large cap category. And obviously we nowhere know what will happen in the next 2 years, 3 years, 5 years, 10 years. But if history is anything, the opportunity in this space, the research arbitrage which is there, and if you can have a solid team with you, backing you right at the ground level, I think a lot of things can be worked out very significantly over a period of time.
Very good. Indirectly, you told how much people can expect. Anyway, thank you very much. And say like now coming to the end of the show, the thing is for advice to retail investors. What you think are the most important factors or items that they should do while investing in mutual funds, in particularly equity mutual funds, small mid cap funds, and others?
So the first thing you should do is do a KYS, which is know yourself. People do KYC, you should do KYS. When the markets are doing well, everybody is a long-term investor. But really now the real test is coming out when, you are seeing 18 months, zero return. And you need to be really believer of this asset class. If you go to a social party, people talking about equities, you say, I'm missing out something in life, blah, 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 and you go and invest equities. Trust me, in the first crash, in the first downturn, you will be out. So if you want to be really part of this asset class, you need to ask yourself, how much is my risk-taking ability? How much is my temperament to hold on to markets or losses? And if you think that you are made for equities temperamentally, then only go for the asset class. Once you have gone for this asset class, I would say that, you need a good advisor along with you. I always say that Arjun may be a great warrior, right? But he had Krishna to help him and guide him. So, Mr. Choklingam, you are the Krishna for lakhs of investors who are dependent on you. to guide them in the right way. People get confused, people don't know what is what, and you need to associate yourself immediately after you identify your temperament, your ability with an advisor. If you can do that, your journey will become more smoother and wiser rather than you trying to do it on your own. Because, this is something which is not your core area of expertise. And the third thing you need to do is that be little patient. Uh, you need to accept the reality that markets work in cycles. There may be 2 years of great years, and there may be 3 years of no returns also. But if you can ride those 3 years with patience and making sure that you keep on disciplined way of investing, a sudden 2 years jump will also kind of normalize the last 3 years of zero or negative returns. And we have seen that in COVID, that till 18, 19 and early part of 20, that your SIP returns had become 3 year was single digit, and 3 years was negative also, in 5 years was single digit. And then 2 years of strong market move changed everything. All the 3-5 year return became a double digit return. So you need to be patient. If you were not patient and you redeemed during bad times, you couldn't have got into the markets again. So, these are few things. If you can do that and identify along with your advisor, good fund managers, good fund houses, and diversify yourself well. Don't, kind of have all the eggs in one basket. And if you follow this basic philosophy, you will see your savings compounding happen at a faster clip over a period of time.
Thank you, Pankaj. It is well received. And now coming to the end, and the last question that I have for you is, something that is personal to you. You want to share with our subscribers. It could be about your hobbies, your family, your likes, dislikes, whatever you want to share.
So one thing which I would like to, as a thought from the entire discussion which we had, one thing if you would like to take away is that, friends, whatever time during the day you get, 15 minutes, 20 minutes, 25 minutes, practice meditation. It will calm your mind. It will make you a better person. And it will give you a view of equanimity. What do you mean by that? Is that during good and bad times, during good times, we get overcharged that whatever is happening is because of me. And you think yourself as a rock star. And during bad times also, you get drained out and you kept on asking, why me, But if you have, a control on your temperament, control on yourself, and a view of equanimity, you will always believe that this phase is not because of me, and this phase will also pass out, either a good or a bad phase. And the way you will behave yourself in that environment will be very different, and it will give you longevity over whatever you do from a medium to long-term perspective. So practice meditation. That's a magical thing which we have. Start with 15 minutes, maybe 20 minutes. Try and see every 1% improvement every day. And that 1% improvement every day is a compounding number, which over 365 days can create magic. So if I was to live one thing with all of you guys and viewers, and the entire takeaway from this session is that please manage yourself. Meditation is a great tool. Start small and then see how big changes can happen in your life. And I have practiced it all throughout many, many years now. A part of what the fund reflects is because what I do every day, either in the morning or in the evening. And this is something which I thought I'll share with all of you. And if you want to take one takeaway, this will be the most important one.
Thank you. Something entirely different from what you have been doing or what you are running for throughout the day. It's absolutely magical. And thanks for sharing so much of knowledge with our investors, and how much I can understand how much bullish you are on India and the Indian economy. And of course, you are speaking with numbers. It's not out of your intuition or anything. It's all with numbers and everything. Thanks for this.
Thank you.
And nice talking to you. Probably when you are here next time, probably we will meet up, or in Bangalore, we can meet up.
Absolutely. Thank you. Thank you, Mr. Choklingam. It's been a pleasure speaking to all of you.
Thank you. Thank you.
Thank you.